Hi there, traders, and welcome to Trade the Structure and the Morning Jumpstart Macro View, where we take a look at the major markets, the US, the European equity markets, and we take a look at some currencies and commodities and so on, just to get a picture of the overall view of where the markets could be heading. Now, last night was a bit of risk off into equity markets. It started in roughly the start of the European session. The Dow headed lower, European markets headed lower. It seems to me as more of a bit of a risk off move as opposed to anything else. I think you saw the yen. We'll take a look at that in a moment. The yen really didn't see any safe haven buying. The US dollar actually moved lower, so there was no safe haven there. Now yields did bounce. Yields did head lower, which means that the bond market's actually popped up a bit. More of just a look across the board. The markets have been moving certain ways, and they've just been a bit of a risk off. Looks like overnight. Now it's too early to say whether this sell-off into the share market is going to continue. It's happened many times before. Get a sell-off, get some buyers come in, step back up, and ramp it back up again. So early stages yet, if there is going to be a sell-off, but it is something we'll keep an eye on. So Aussie markets will start here. You can see Australian markets was pretty much opened around here, popped down, ramped up into the close, which is not unusual for a choppy session in the ASX. And then pretty much the US start of the European session, it was straight down. Okay, the action was pretty much straight down from there. So it pushed down from the day's highs, or actually flushed the day's highs at 73.53, and the overnight highs from the previous overnight session, flushed that, and then it was all one-way action after that. Had a bit of a bounce, and then headed down into that 72.93 area. So I'll be watching this area to see if we do get a continuation of that negativity, or whether we just get traders brushing aside, looking for bargains, and pop that market up on the open. So that's sort of the key market for me. I've got my little levels drawn up there, what I want to see happen. If I want to see a bigger sell-off, I want to see sort of pop through, retest, and then a failure down to 72.70, or we just sort of chop around here and ramp up into the close. All right, look at the bigger picture. This is the 30-minute chart. You can see, excuse me, we have actually rolled over from here, but it's not significant. That was all overnight session, okay? So, up until then, the market was pressing higher, okay? So overnight session, we saw some heat come out of the market. So it could be a fact that, like we said, some heat comes out, we open up, they go bargain hunting again, okay? They're just trying to press the market lower to get better prices on the open, okay? And then start to support it from here and ramp it straight back up to 73.90. We'll wait and see, but that picture to me, trend is still up, not really broken any anchor. The significant level really is down here at around 72.70. If that can sort of chop down, flush down, and then ramp back up again, okay, the trend up is still intact. Okay, so we'll just watch that for a while. If it does start to ramp down and we get a significant higher low play out, maybe something like this, if we sort of press down and we start to get a bit of a bounce and more of a significant lower high, I think that's going to take us to some key lower levels, okay? Over to the Hang Seng. The Hang Seng has, we know it got smashed a while ago, and this has bounced back quite hard, and it's actually holding those gains. Okay, on a daily basis, it's just a bit of a bounce. It's coming to a resistance zone on a daily basis. So whether we get some follow through to the upside, I think it's starting to sort of go sideways here, consolidate those gains, and whether we get a bit of a flush lower and then bounce back again, we'll have to wait and see over the next coming days. But intraday, to me, I'll be looking at this 21,760 zone. You can see it was quite a choppy session, really. We had the market flush on their day session open. So yesterday, just during the ASX session, we had that big bounce, and it was all one-way action up, and the actual underlying index had gapped up, and it gapped and go, basically. So it gapped up and continued to press higher into the close. And then basically once that market had closed and the European market was open, we got this big move down. And that move down was, from there to sort of the lows was 540 points or so. And then it turned around and bounced back about 520 points. So it's a very choppy market overnight, which suggests to me that they're trying to buoy it potentially. They don't really want it to go down. You really want this consolidation of this gains, maybe chop around here a bit longer and then press higher again. Okay, or they just don't believe that this US market sell-off from last night is going to continue. Okay, we might find some bargain hunting tonight. So it'd be interesting to see how this actually opens. I would expect it to, if it's going to go down, probably flush through this level, 22.022. The reverse of this, generally they go up, they'll flush down and ramp. Okay, go down and it'll flush up and ramp, fall over. Okay, but we'll watch it out in the open. The Nikkei, that was a out of the blue move up. It gapped up and just continued to press higher. So the index itself ended up about 3% for the session, which is a big move up. Now, to me, that was out of the blue. I didn't understand why there was so much strength come into it, whether I missed some news. But either way, it gave up a lot of those gains from the start of the European session. You can see it just flushed straight back down again. So it'd be interesting to see whether the equity market reverses a lot of the gains from yesterday, when it opens. It's going to gap down a couple of 100 points on the open, whether it continues lower and presses down through this 27.520 area, or it flushes into there and start to find some support there, and we get it ramped up later on in the session. Dow basically moved up through that 34,780, which we were discussing yesterday. That was chopping around, consolidating there. There's obviously two moves. You get one move where it consolidate, continue up to 35,025, which didn't play out, or that's kind of a flush at that level, dragging in some buyers and then squeeze them out and the move down, which it did exactly that. All right, so it was just lackluster on the upside. And once that move started to go down, you've got all these buyers starting to unwind their positions. Anyone that's bought in here, off this support, off this level, anywhere in there is one bit at a time getting eased out of the market. Okay, so now we'll see how that market, how the Dow reacts around 34,350, or whether it's going to press lower and extend on those losses, or extend on the move down into 34,150. Look at the US tech, same sort of move. Pressed up, that smashed up. That was the open of yesterday's session, overnight session, or the previous overnight session, and then pretty much consolidated sideways. And then we got this little sell-off spike. What was that? That was around 3 a.m. So I'm not sure why it actually ramped up on the open. I think they maybe just wanted to retest, flush out that level, and head back down again. But that was a lot different to the Dow. You got the Dow movement was pretty much all one-way action. So at 3 o'clock, it didn't really react anywhere. Okay, so looking at this, the Nasdaq, excuse me, we'll see if that can continue on. I think it's going to have a deeper pullback or deeper move down into that 14,422 area, 14,400. I think that will probably, for me, I'll start to move down, test into this zone through here, which it chopped around in before. Okay, so it can get choppy. There's still some love for tech. Whether they're just trying to hold it up while your bigger positions, your algos are trying to chop it around while they're trying to get out of bigger positions, I'm not sure. But for me, it is getting extended. Even just this move up off these lows is getting a bit extended. So there is a lot of room to move for a big short, long squeeze. Okay, squeeze of all these long positions and market move down. The DAX, DAX was chopping around this level here. We were spoken about this yesterday. It pushed up into that level and then failed. So basically, the start of the European session, which is around 6 o'clock, we started to get failure off 14,565. Okay, and I would expect it's taken out that quite suddenly. So I expect that's going to start to form into maybe a double top. You can call it a double top if you want. Retest failure of a bigger level, which would mean that I'm either looking for one, two things: just expansion, continued expansion down 14,120, maybe flush that level, which looks like it'll probably do on the open today. Or probably in the European session, flush that level and have a bit of a bounce back if we start to get some bargain hunting there. And then what I'd be looking from there is maybe a bigger move, get some bigger failure there for a lower high. Okay, if that's going to get a really bearish move kick-started. UK, that was just a bit of a grind higher and they just reversed. So it's kind of a strange move where it just reversed on the open. Okay, you had the BOE out last night and the Fed Reserve's out talking up inflation again. I think a lot of people in all markets they're just trying to work out what the inflation means and what the BOE is saying, or what central bankers are saying. Okay, whether they're going to actually try to calm inflation or whether it's going to get out of control or what's happening. Okay. Just because they work for the central bank doesn't mean they're right. All right, they could get it wrong. They could let inflation go too hard, and then have to start hitting inflation harder with harsher rate rises. But I think that's what the market's trying to figure out now. Okay, big rate rising cycle, or is it just they're going to inflation? The central bank is going to be right. They haven't been in the past. They're talking up transitory inflation. They've been saying that for quite a while. They're still sort of sticking to their guns there, but it doesn't seem to be transitory. With oil, since they've been saying that, oil's just rocketed up, really added to those, added fuel to the fire of inflation narrative, I guess. So I think everyone's just trying to decide when you start to get up into, an extended market, they're happy to take some gains off the table. If it comes back down, they might want to buy it again. Okay, so they're just trading the market rather than investing into the market where they think it's in a nice bull run. I think this bull run, everyone's starting to see with this new cycle coming on board, that bull run's over. Okay, it's just whether it's over now, next month, a couple of months down the track. I think that's what we're sort of tossing up at the moment. Looking at the currencies now, like I said, the US dollar, well, not so much with the Aussie, but the US dollar pressured the currencies up. Wouldn't say pressured lower, but the US dollar fell over during the European US session, which added fuel when it heads south. You got currency pairs, anything linked to the US dollar. So Aussie, pounds, US, Euro, US is finding some buying pressure. And with the Aussie, it's getting the added buying pressure of commodities rallying. Okay, so they're really it's really finding some love into the Aussie at the moment. That's the start of the US session when the US dollar started to head south. We'll just show you that there. We'll just get that dollar US. Okay, start of the US session was here. We've got the sell off. Doesn't mean that it's going down. Doesn't mean it's rolling over. It's still sort of bouncing, and that's that major zone we're talking about. So longer term, it's still just bouncing around between 97.60 and that's sort of say 90. What is it? 99.30 up here. Okay, we look like it's starting to grind its way higher. We've just got a lower high potentially coming into play there. We could be looking in the markets, just looking at something like this, starting to hold, and we're starting to roll over, and we start to head back down to the support zone, which would mean there'd be more love back into some of the currencies if there's a bigger move down in the US dollar. But for now, I think the currency is just trying to work it out at the moment. So for the Aussie, if the US dollar gets weaker, more loves of commodities, and then you get to the Aussie dollar pressuring higher. I think a bit of a pullback, potentially retest to 74.80 if we can get that. Start to look for that, start to retest, and then look for a buying opportunity. I would be looking for a buying opportunity off that, maybe something like that. Okay, so over to the euro. You can see here it's quite clear when the US dollar fell over, US dollar rallying, US dollar falling over. It's pretty much reacting lockstep with US dollar moves. For now, pressure's down at 110.45. That's the anchor to this sort of move down. Whether this is going to be a double bottom at 109.62. Now that would play into a further weakness into US dollar. If it starts to chop down and starts to find some support like that, then I would expect a bigger move higher. Okay, but if not, it's all based around that US dollar at the moment. Looking at the pound, it did react up, but it looked a bit more contained. You got a big sell-off from that high, 32.76. That was at the start of the European session. Big sell-off there. A bit of a bounce. It got capped at the 32.10 mark. So whether we get a bit of a rollover, it's sort of locked between a narrow range there. It's a 20 pip range between 131.90 and 132.10. If it starts to press down in here and ramp back up again, then you're going to squeeze on these sellers here. If not, we're going to get a bigger move down, potentially a secondary leg down. I would, if I'm going to get bearish here, and start to look for a selling opportunity, I want to see more work done. I want to see a bit of a flush and then, failure. Okay, failure to move higher. Ideally, I'd like to see something like this, and if we start to get that move, then we could be in for a better move down. Potentially, if we look at that as our volatility projection, potentially like that, and we move back down to that 31.26 area. Okay, US yen. Now, what I was saying before about safe havens, excuse me, safe havens into yen's a safe haven buying. So if safe havens are not getting bought up, gold did rally, but not as a safe haven, more because the US dollar was heading south and it found some love. And a bit of a sell-off into equity markets always triggers bulls into gold. Now, I don't believe that's a safe haven buying because you've got this move down into the yen. Now, I would expect if there's some safe haven, you expect the yen safe haven buying, because it has been sold down quite hard recently, to outweigh the buying into US dollar. Okay, and the fact that the US dollar went down, and we didn't get any sort of, with the equity market rolling over, we didn't get any safe haven into the yen. It means that this, the currency pair is potentially not too concerned just yet. I think it's going to stand its ground for a bit. If the equity market's going to really start to get hammered, you're going to see the yen start to get bought up, which means that pair is potentially going to roll over into the US yen. And if we start to get this market rolling over, they're potentially preparing for that. But at the moment, they're not. I'll be looking at that 121.16 area. If that starts to hold, then we start to get this market looking to squeeze out some of these longs. A lot of longs have been building up over quite a period of time now. We've got it all the way from down here, and that's from the 11th or 10th. Okay, so a couple of weeks now that's been just pressuring higher, consolidate, pressuring higher, consolidate. This expansionary phase has been quite good. Now, this to me looks like it's potentially changing its tune, but we need some more evidence. Gold, like I said, gold expanded higher on that US dollar move down. Now, it did start that move up a bit earlier. This is 2:30. That was around the US session open. It started a bit earlier than that as equity markets came into pressure, probably the start of the European session. That was at 6 o'clock. So that 6 o'clock move, that high low, was just when the markets, European markets started to roll over. Indexes just a risk off into shares, and that's when the gold started to pump up a bit. So it really did take off. It's extended into 1950, so I don't want to buy it up here. I want to see more of this action. I want to see a pullback. I want to see that pullback stick, and I want to see a few of these longs flushed out before it starts to ramp up again. But longer term, that actually looks pretty good. Good selling, good little high low here. So if that's the case there, we've got a potential to move. That's kind of the move up. And if we're going to go off that high, sorry, off that low there, we could look to easily extend that move into 1964. Look left, there is a bit of a level through here. Potentially you've got a zone in there which you could easily extend into. So look, it could just ramp up from here. So just be wary of that. It could be a little, if you do get a mild pullback to 1940, for example, we do pull back to here and start to build up there, I'll be looking for that extension to 1967. All right, oil continues to ramp up. Now, this is not ramping up because of, I don't think it's got anything to do with the, Ukraine situation and supply demand dynamics. It's just been bouncing, it's just been pressuring higher. So the market's just reacting. I think oil reacted more to um, the indices rather than sort of any supply demand imbalance, as in less supply, more demand because of inflation and things like that. I don't think this little pop up last night's got anything to do with inflation. It's just a bit of a reaction. Markets popped down, started to consolidate, technical traders lifting it up through 111.15, extended through these highs at 113.39 and 139.40. Potentially it's just looking for somewhere to find some, drag in some more buyers and then turn around and rally, press down. But at the moment, I don't think much has changed. You've got the US oil, I think it came out a little bit, I don't know what the latest figure might have been a bit higher than expected, the inventories. So potentially going to start to load up on the inventories, start to sell to the market when it's strong, get a better price. But we'll wait and see. Copper. Now, copper looking quite good. We spoke about this yesterday. Started to hold these inside levels above 102.15. Started to hold in here and ramped up overnight. Now that's finding some love, obviously, from the weaker US dollar, and this sort of move into commodities at the moment. It's finding some love there. So this could lead, if we've got this ramp up here, this could lead for a big move back up into these daily highs at 107.18. Now this is daily resistance. Remember, if we start to look back a bit, we'll go to the 4-hourly chart. There you go. You can see that daily level right back here. And that move up actually doesn't look too bad. It's a big daily move up, big pullback to this zone through here. And it's been lifting ever since. It's been holding that trend up ever since. So this could easily expand back up in the 107.18 and really kick on. So if you're a share trader, be looking at your copper positions. Bitcoin. Now, Bitcoin and Ethereum, we'll look at both of those together. I'm sort of looking, we've got this failure off this high at 36. You can see it started the US session, it was actually coming down through European trade. It started the US session, ramped up, and then failed straight back down again. Where do we get? I'm looking really for that lower high. It looks to be like they want to buoy it. It wants to get held up off that 29.64, but I'm still looking for that lower high because I'm looking to see if this becomes a double top. If we start getting a lower high, then yeah, I'll be looking for a sell-off through 29.64, and with Bitcoin, I'll be looking for this sort of punch through, what's that, 42, 100 level or 42, and look for get this sort of setup here, push down, pop back up, sellers, buyers realize they're on the wrong side of the market, get a lower high in here and press down into that 41.250. It doesn't look too bad at the moment. It could still, continue to, rally up to 4,300, but with equities take another hit, then I expect this market to take a hit as well. So that's it for me, guys. Hope you enjoyed that, and we're trying to keep it a bit shorter, but so many markets to get through just to get that bigger picture view, that macro view, always takes a bit of time. So thanks very much for joining me, and we'll see you again tomorrow. And if you do like what you hear, it'd be great if you can leave us a like and subscribe to our YouTube channel. Thanks, guys. Chat to you soon.